Hi, everyone. This is Tiffany Vaughn, CPA and credit specialist with Sense Savvy, here to discuss all things credit repair and credit education. Thank you so much for joining. I hope you get a ton of great credit information out of today's webinar. And just remember, throughout it all, success begins with a single choice. So with that, let's get started. So today's agenda. So first, we're going to talk a little bit about me so you can get to personally know me and kind of how my business came about and really the mission that we are trying to achieve from a financial literacy perspective at Sense Savvy. We're going to talk a little bit about who this webinar is intended for, the training audience. Then we are going to move into areas of focus when repairing your credit. And then removal of negative items, errored items from your credit report and how you can do that successfully. The fastest methods to increase your credit score, which I know a lot of people are always interested in. So we'll be talking a little bit about that. A few credit repair industry secrets, things you might not know now, but you will definitely after today's webinar. And then finally, how to start repairing your credit today. So moving into a little bit about me. So I always knew that I was going to be a businesswoman. I was going to work with numbers. So I started my education at Michigan State University, go green, and received my Bachelor of Arts in Finance. So that's my undergrad. And then a year later, completed my master's in accounting. That subsequent year, I became a licensed certified public accountant with the state of Michigan, really working and starting my career in the assurance or audit practice. So, ethics, honesty, integrity are at the forefront of anything and everything that I do. A little bit of personal information. In 2013, so a little over 8 years ago, married my high school sweetheart, Sebastian, who you see pictured here at the bottom right. 2 years later, we had our first son, SJ. And shortly after having him, I started Sense Savvy. And we'll talk a little bit about Sense Savvy, what we do, and again, our mission to serve our clients. And then finally, in 2019, we had our second son, Malachi. And again, this is our holiday photo, all of us there in matching red. So who we are, Sense Savvy. So again, Sense Savvy was founded in 2016, so a little over 5 years ago, and it really started as a blog. So I really wanted to give financial literacy information out to clients, to anyone who was really interested in taking control over their finances. I'm the owner. We are, again, a financial literacy company based out of Michigan, where I'm from. And we really strive to teach the importance of financial literacy. And we have different lines of service, the main one being budgeting, credit education, really personal finance. I am, again, a CPA, so tax planning, tax preparation is another line of service. We also help small businesses with their finances, accounting, and then also providing life insurance services. So truly, all things financial literacy, we strive to be our clients' financial resource for it all. And then specific to credit repair, we have helped thousands repair and build positive credit. We, again, put out a lot of content through our social media outlets, our articles, blogs, just a lot of content. We're really trying to push and advocate for financial literacy. So helping those build positive credit, get their credit back on the right path is what we are here to do. So who is this training for? So if you are tired of letting bad credit control your life, if you are tired of getting denied for credit or needing a cosigner when you're looking to get a new loan, whether that be, an auto loan or a credit card, or approve for a new rental or apartment townhome. If you are tired of the calls from the debt collectors, then this training is definitely for you. And, on the positive side of that, if you are also ready to increase or build your credit scores, if you are ready to get out of debt, and if you are ready to achieve your financial goals, this training is for you. So you are in the right place, and we are happy to have you. So who this training is not intended for. So if you are not ready to learn the right way, again, the right way to repair credit from a professional, someone, who is knowledgeable about the process, knowing how to, again, do it the right, ethical, legal way. If you are also not ready to act on what you've learned from today's training, and then also if you're not open or ready to change any negative perceptions that you have on credit repair that you might hold now, maybe this is not the right time for you. But these are all of the things that we want you to take away from today's training. Also, if you stay to the end, so we will get you a Get Out of Debt e-guide, and that'll be free, and you'll see it kind of at the end of the webinar as an option to sign up through email to get that over to you. If you stay to the end, you're going to receive tons of credit education information. Again, my mission and goal is to make sure that we are advocating and spreading financial literacy. So we want you to receive a ton of new information, maybe that you weren't aware of before today's training. We want you also to get out of this learning what you need to do to start repairing your credit. That's critical. And then finally, you will have a game plan, tips, tools to help you achieve any and all of your financial goals. So that's really what we're intending to do today. Super excited. And let's get started. So the fundamentals. So what is credit? So let's start with the definition. Credit is the ability to borrow money or access goods or services with the understanding that you'll pay later, right? So let's start with the different types or places where you would see credit, right? So the credit report would be the first place. A credit report is a record of your past and present financial footprint regarding credit. So anytime you have applied for credit, any, credit cards, any time that you were required to, apply for the credit, that would be listed on your credit report. Now, when you go apply for credit, typically those lenders don't have the time to read through everyone's credit report, right? So they need a way or a method to really summarize kind of the activity on your credit report. And that's where your score comes in. So the credit score is truly just a summary of the activity from your credit report that determines your credit risk. And that is used by lenders to determine, are you worthy of credit? Are they able to allow you to borrow from them? So that's what they use it for. There are three major credit reporting agencies: Equifax, TransUnion, and Experian. And on your report, if you aren't familiar with the different sections or categories, your report includes the following. So it'll start off with your personal information, so name, address, date of birth. Then it gets into the credit account information. So this would be the types of accounts that you have, whether those be student loans, credit cards, mortgages, personal loans. It lists all of those out. It also lists the current balance or the open credit that is on or currently on those accounts. And then also your payment history, which we'll talk a little bit about later. Super important when looking at your credit score and calculating that score. Then we have negative information. So this would be any collections or bankruptcies, liens, any judgments that are negatively reporting are also included on your report. And then finally, inquiries. And inquiries can be hard inquiries or soft inquiries. So a hard inquiry would be when you are actively pursuing or applying for credit. So you go, you fill out an application, you authorize the lender to pull your credit. That is a hard inquiry. A soft inquiry would be when you go to your mailbox and it says, Tiffany, you've been pre-approved for this new credit card. That's a soft inquiry. Those do not impact your credit score. They're just kind of almost feelers out to see if, hey, does Tiffany want to apply for a new credit card? So the ratings on your credit score. So we have kind of 4 different buckets here. So we have, let's start positive. Excellent credit. So typically your credit range is from 300 to 850. So anything over 720 is considered really, really good or excellent credit. So this is where we all want to strive to be and to maintain a credit score in this area. Then you move into good. So 690 to 719, you are still considered, to have good credit. You will get reasonable, interest rates, shouldn't have many issues getting approved on your own for, loans and lines of credit here as well. May not have the top interest rates or getting those, lowest interest rates if you were here, but still a solid, good credit score. Fair is where we then begin to maybe see higher interest rates. You might be approved. There may need to be a co-signer, but not necessarily kind of getting the best offers in the higher categories. And then finally, we have bad or a poor credit score, where likely if you are getting approved for credit, you are paying very high interest rates, or you're just not getting approved at all. So our goal is to move in this direction and to continue and to maintain a credit score in this area. So what makes up your credit score? So how it is calculated? Well, the biggest piece, and here it comes back again around to payment history. Your payment history makes up the largest part of your score. So I always recommend to my clients, if anything you can do, try to make your payments on time every time, because that is the largest factor in your credit. Then we move into amounts owed. So how much is outstanding in your credit? Are you using 50% of your credit lines? Are you using 90%? Are you using under 30? Under 30 is where you want to be. So as an example, if you have a credit card that has a $1,000 limit, you want to make sure at any given time your open balance is $300 or less. You don't want to carry typically more than that, because then it kind of kicks into what would be considered a higher utilization or a higher use of your credit. So we always want to try to stay under 30%. And then we have new credit, length of your credit history, which comes across or comes over time. You have, your credit history will lengthen. And then credit mix, so the different types of credit that you have on there. Do you have, again, a student loan? Do you have a mortgage? Do you have a personal loan? So kind of the mix of the type of credit you have. And then finally, new credit. So this is how often you are applying for new credit, the number of inquiries within the last 2 years. So this is what most, or at least the FICO scoring system, uses to calculate your score. And again, all of this is being driven off of what is on your credit report. Why is your credit score important? So we've got a couple of reasons here. First, it is your financial borrowing reputation. So you really want to make sure that that reputation is upheld and maintained in a positive light, because this is used truly for a lot of things that even some people don't even know. Of course, it decides if you will get approved or denied for loans. Some employers now are even using it to make employment judgments based on that score. And it can really kind of take over and control your life and your next move financially, what you want to accomplish. If you want to start a business, if you want to buy that dream home, if you want a new car, All of these things can revolve around your credit. So it is really, really important that we take care of and maintain our credit. And also with that, with the maintaining of the credit, sometimes there are errors on our report that we are not even aware of and that are, inaccurate. And then finally, negative items can again help you or hinder you from achieving your goals. Now, I always like to put this slide in here, and I talk to my clients a lot about how errors can impact your score. Even something as simple as an incorrect name or an incorrect address, 20 points gone from your score. And then it just keeps going up, right? So like if we have an incorrect balance, 45 points gone. Incorrect credit limit, 45 points gone. A late payment, could up to 110 points can be lost on your score. And then of course, collections and bankruptcies are kind of the largest impacts. So thinking about if you have many collections, or even if you are able to get rid of or remove a collection, what that could potentially do to your score. It's amazing. So how does credit repair work? Well, there's really 7 steps. So the first step is to pull your credit report. So whether you're doing it on your own or you have a reputable, credible, legal company assisting with that, you want to pull your reports. We got to see where we're beginning. So even with my company and the services that we provide, which we'll talk about a little bit later, that is always our start. Let's see where we are starting. So pull your credit reports. Then what you want to do is identify all of the negative items that are currently being reported on your reports. You also want to look at how many open accounts there are, and then you want to start to identify some inaccuracies. So this could be as simple as, oh, my name is wrong. I've never lived here. Oh, this one credit bureau is reporting something this way, and then the other credit bureau is reporting it a different way. That's an inaccuracy. We should figure out what's going on with that. And then once you've kind of gone through all of this identification process and the kind of reconciling all of your reports to make sure, are they reporting, similarly, then you want to get into the disputing. So you want to dispute negative items. And here's where it is critical for understanding, basing this on inaccuracies and compliance issues found. Okay. So we want to dispute based off of any inaccuracies we see and compliance issues found. Once we do that, our goal is to get these things removed, and then moving forward, adding positive accounts to our credit profile. I always tell my clients there's really 2 ways to build your credit. Clear up what is currently being reported on your credit report, and then make new positive accounts going forward. That is really the key in building your credit. So why are some scores different? So sometimes if you pull your report, you may see an example here, something like this. Well, there's, kind of differences in the report. And typically when we see this, if the differences are within a small margin, that's okay. Because each credit bureau is using a different way, a slightly different way to determine your credit score. So if we see something like this where, okay, 706 to 717, really like an 11-point difference, not too bad. It's when we begin to see, 100-point difference, 50-point difference, something's going on that we need to resolve. And then another thing that could be driving that, and that's when we're really getting into the, identifying what's going on, is sometimes, depending on the credit bureau, they may not be reporting negative and positive things the same way. Again, all a part of the repair review process, because we want accurate positive items being reported so that your score can be as accurately reflected as possible and get you that higher score. So how do you legally repair credit? So some people may think, oh, I'm a little skeptical about credit repair. I think it's a scam. Well, here's kind of what is happening. And here's where we're getting into these credit industry secrets. Credit reporting is optional. Okay. Your lenders are not required to report any information to the credit bureaus. When they do, and even if that information is inaccurate, credit bureaus make a ton of money from having inaccurate information. They use your information and they send it to banks, mortgage companies, credit card companies, any types of businesses that will grant credit because they're trying to get to you. Okay. So even credit monitoring services, similar to, My FICO, Credit Karma, all of these types of companies pay the credit bureaus to monitor your credit. So credit bureaus really typically aren't in any hurry to make sure that your credit report is accurate because they get paid based off of continuing to monitor and making sure there are things on there for them to monitor. Okay. So what types of items can you get deleted? Really, everything that is an inaccuracy or an error. That could be an inquiry, any late payments, collections, evictions, bankruptcies, student loans, truly anything negative that is reporting. Again, our goal is to have accurate and in compliance information. When I say in compliance information, and I think we're going to get to that soon, but essentially what that means is if something is truly yours and it is negative and it's accurate, the compliance part of it comes out to be, well, should it still be reported on your report? So that's what we mean when we talk about compliance. And here's just a quick screenshot of kind of how we operate. So we're looking at different credit bureaus. We're looking to see, okay, all right, here's what's being reported positively from each of the bureaus. Ooh, we have a negative inquiry here. And as you can see, we've got some question marks because there's information not being reported. So here's an inaccuracy, right? So what we like to do here is we would do what's called validating an account, meaning we would send this to the credit bureau to make sure, hey, we want to validate that this is our client's item that's being reported, and they're then going to investigate that and make sure that it is appropriate. And if it is not appropriate, then they are required to remove it. So I get this question a lot. Well, what if the negative item belongs to me? That doesn't necessarily matter. Again, we are focused on factual disputing, really how things are being reported. So should it still be there? Has the statute of limitations expired and it should no longer be on there? Again, it is the credit bureau's job to make sure everything is 100% accurate in the way that they are reporting. They just don't make it a priority, but we will, and you will, because we are making sure that the information is accurate to achieve your goals. And if they can't make sure that it is accurate or they don't have proof of it being accurate, they have to delete it. They are required to delete it. So let's start building your credit today. So again, we're going to start by getting your credit reports. You're going to look again, do you have enough open accounts? So we want to make sure that you have positive open lines. And typically we tell clients 5 to 10 positive lines is the goal. So we want to make sure, even as we're building moving forward, we have open credit, open lines that are positive. A great fast way to do this is an secured card. So a secured credit card is one where you are your own lender. You put a deposit down. Typically there are no credit checks for these because you are funding your own credit card. So they're a great way to begin to build moving forward, build credit and quickly, I might add. Another option is to become an authorized user on a card that is already in service. So if you have a family member or a friend who, and here's, a great piece of advice, is already a responsible credit user, you really, that's really, I guess I would recommend the only time we really want to do this is what you would do is you'd become an authorized user. I would recommend you not actually getting a card or ever using it. It's just you are able to build up your credit by basically kind of doing a piggyback off of their responsible credit use. So it helps build your credit up too. So it can be a really good way to build your credit, but you have to be aware of, is the person that's making me an authorized user, are they a responsible credit user, and are they paying their bills on time? Because if they're not, it could go the opposite way as well. It could be not a great situation. And then you want to pay down your credit cards. And we spoke a little bit about this earlier, to 30% or less, right? We want to keep that utilization or open credit below 30%. It's a great way to begin building your credit. So all of these things we should be striving for when trying to build our credit, and are actually pretty quick ways so you can start seeing results. So I've talked a lot about some things that you can do to get started, but sometimes, we want assistance, right? So if you are looking for assistance, my company does have an awesome program, our Cent Savvy Elite Education Program. And I'll tell you a little bit about it and who it is for. So again, if you don't currently, I know we're all busy, don't currently have the time to learn or work on your own credit, but you do want to make it a priority, this program will be for you. You want it done right. You want it done the legal way, and the long-term way, right, by a professional. Sometimes we do get results, but they are temporary. What we are doing here, and as a part of this elite program, is making changes that are permanent and changes that will help you after the program has ended for you, moving forward, make better, positive, responsible credit decisions. You want results. So, we have been at this a little over 5 years, and, we are working for you to get the results that will help you achieve your financial goals. So we, again, have worked with thousands of clients over credit repair and helping them build positive credit. And we really know what, to do to get the results that you need to achieve your goals. And you also want peace of mind knowing that, your credit score is increasing really while you're sleeping. We're working hard for you. We're working with you. Our goal is to help you achieve your goal. So in addition,